we also didn't get it promoted very well. So that's more the problem. It wasn't even a thing. That's fine. I'm live now on YouTube. So let's go ahead and get started here. So let's go ahead and let the people in, hit record, and let's get this party started. Do-do-do. All right, let's go. Let's get going. Little weird time, little weird day, but you guys need to mark your calendars because the bus does not stop. Either you get on the bus or you get run over by the bus or you miss the bus. One of the two, one of the three. So we're going to get right into it. Got a couple deals to go through here. You're watching on the replay. You can always reach back out inside the school community with questions if you need to. So let's get into this real quick. Hope everybody's having a good Friday. And let's share my screen. And so I got, I don't see Ryan had a deal too. So we're gonna do this deal coming up right now. We're gonna do this, and then we're gonna go into the Michael's got a deal in Galveston, and we're gonna go through again. So Michael, make sure you're ready to present your screen and show all the numbers. I think I might be able to do it on my side. We'll just walk through it. All right,
Okay,
so let me
thanks.
share my screen and go. Oh, where'd it go? Hang on. Abort, abort. Do. Give me a second. Hard taking doing all this with one screen on a laptop, but that's okay. I got it figured out. Just thought I had it open. There it is. Go back.
Nick, are you in like at a mall or something?
Now everybody thinks I'm in a mall. I'm in an office. It looks like a mall. I mean, it sort of does. No, it's I'm in an office. I'm in it. I'm out. I'm in the office. It just I'm in the outside area. So
Oh,
let's see here. I know everybody thinks. No, I wish. No. Okay. Let me. All right. Let's try this again. Share my screen. There she is. All right. Let's get right into this, guys. Okay, so this deal just got in. This is an awesome, awesome deal. I love Mesquite. It's probably one of my favorite. It is, I would say Mesquite and Garland at a localized level in the DFW market are probably my two favorites. Arlington's pretty close too. Arlington, Garland, Mesquite, man, they just reek of money when it comes to deal structure. And these houses do not last very long. I mean, Michael, you've had stuff in probably all three of those. I mean, how fast does that stuff fly off the shelf usually?
super, super hot. And also Rockwall. Rockwall is a super hot area as well.
Yeah, Rockwell, a little bit more expensive, little bit from an affordability standpoint, but yeah, it's right on the lake. So here's the deal: 3004 Kensington Mesquite. Okay. As is value about 287, 300,000 is what I think it is. Monthly rent, I think that's really low for Mesquite. I think it's probably closer to 2,300, but it doesn't really matter because we're not keeping this as a rental. Neither should you, in my opinion. This is a sub two deal. Okay. Here it is. This is a little bit unique because there's a lot of equity in this house, hence the cash to seller. So the unpaid balance on this is about $200,000. I got closing costs at 4,500. Cash to seller is about 51,000, which makes the total acquisition price around 255 ish, without any other holding costs. And I think this is a $300,000 house as it sits. Pretty easy. Okay, here's the underlying debt: $200,000, 926 P&I, only a 3% mortgage, and 312 payments left. So we've already got 4 years of pay down on a 3% mortgage. That is a tremendous head start. And before I go in any further, I already knew this. I didn't go in. I haven't looked at a lot of I haven't looked at any of the the ARV numbers yet. I haven't looked at any of the other details per se, like flood zone and stuff like that. We're gonna do that here on this in a minute. But I already know that when I have something that has a 3% interest rate that's been paid down 4 years and it's below what I already know to be the ARV, this is no question a deal for somebody. Okay. So let's get right into it and see what kind of deal this ultimately is based on the numbers. So I got the sale price at 299,000, $30,000 down, 2 loans, and I wrote these at 9.95. Anything under $300,000, we're able to get 10%. Matter of fact, we just did a deal. We did 2 deals this week. One in Fort Worth, and it was a $275,000 property, and we got the 9.47, but it should have been, they wrote it wrong and we just kept it that way. It was a weird number, but 9.47, and we had the one out in not too far out. I think it was Terrell or Seagoville or something, and we got 10% on a $400,000 sale. So market's really starting to pick up now on these deals. People are getting off the fence, and so these are the payments coming in. And let's just see what this is. This third-party funding on this. I've got it at 15%. I got it. So this shows negative $75 right now at a 15% on 60 months. And the reason why this is because there's so much equity in it, and the value is on the pay down. So you could actually borrow a little longer term if you needed to, if you wanted to get this down. Like if you went to 66 months, you just add 6 months. Now you got $192,000 in cash flow. So let's leave it at that because there's equity in the deal. I would probably do that. So now what does this look like? Cash offer would be 210. Well, no, the seller's not going to take 210. There's not enough cash in it. Here's the deal. If we leave it at 66 months on the payout, 192 cash flow monthly, plus a net cash flow after gap funding is paid of 1432. I'm going to go here and analyze this over 120 months. It's for $203,000, man. I mean, this is a smoking deal. Like, if somebody has access to gap funding on this deal and can go get 15% money for 66 months, this is a solid deal. And what I like about it, you still got $9,000 coming back, maybe a few dollars more. This is a really good deal. So now, just because the numbers say it's a good deal, let's go see what it looks like on paper, okay? Because this is a really important piece of this equation, and let's just see what happens. So let me go to Google here, and then we'll open it up to questions, and we'll go to the next deal. So here we go right here. Let's put the property in. Let's see what we got. So let's go to Realtor.com. So here's this is off market, but I don't know how recently these pictures are, but I think they're pretty accurate. Okay. Not mid-century, 1977 build, which it's great. These are where the value is because they're solid houses. They're 1 story, they're brick, they're very desirable houses, easy to convert garage into living space if the buyer wants to do it. But let's just take some of the pictures. This looks to me to be like an older person's house. They probably maybe have been in this house for quite some time. Okay. They probably refinanced it out. You can tell it's got some just older finish out, but it's clean. Like somebody that's going to live in this house would rather buy it and then do the updates themselves. And it's only going to add value to the property in the end. So this is super, super clean house. We call them grandma houses. This is what my grandmother would live in, right? It's perfectly clean. You'd stay there all up for a month, and it's just clean, but it's just, it's got weird stuff in it, wood cabinets and stuff like that. So anyway, now let's look down at the numbers. So the estimated value right here, boom, 291. That's an offer pad. They're a wholesaler. So let's look at the other details on here. Down here, let's look at the real estimate. Look at, man. This is what I want to see right here. So right here, it's right at $300,000. Okay. But here's what I always do this too. I want to know what this thing was worth 5 years ago. Because I can't predict the future, but I can look at the history and see what it's going to do. So if I go back to 2020, this is after COVID, by the way. Things have already started to go back up by then. This house was a $200,000 house. Okay, right here. You can see it over here, $200,000 in February 2020. So does that mean 5 years from now it's going to go up another $100,000? No. Is it probable? Yeah. Is it possible? It just depends. But there's no question in my mind this house is not going to go down in value over the next 3 to 5 years. It may go down like this right here. It dipped a little bit, big deal. It dropped a little bit, big deal. Then it went right back up, then dropped a little bit, big deal. Then it went right back again, then dropped back down a little bit, big deal. Why does that matter? Because the year over year, it's up. Like it's at 300. A year ago, it was at 282. And here it was at 278. Then here it was at 270 or 240, whatever number you're looking at, and so on. I think this will probably this will be a gradual increase in value. Why is that important? Because if you're the lender on this property, the bigger the spread becomes between what's owed to you and the value of the house, the less likely you have for a default, right? Because why would a buyer default if he had 50, 60, $100,000 in equity? If we would have sold this back here on a terms deal to our buyer at $200,000, okay, and now it's worth $300,000, what is the likelihood that buyer is going to default and stop paying you, and the house is going to go to foreclosure? Is it possible? Yes. Is it probable? Highly improbable. They're just going to go sell the house. You don't really care because you're only in it for 200 anyway, in this example. So let's look at the environmental risk. Okay. Insurance is a big deal. It says flood rating is moderate, which gives us a rating of 4. Okay. The property has a 22% chance of flooding over the next 30 years. Okay. Not very high. And I will tell you, that's probably very high, relatively speaking, because look, this house was built in 1977. And go back up to here. 1977, this house was built 50 years ago. Okay. Find it right here. Come on. Where'd you go? Man, there's a lot of information on here. Come on. Keep scrolling up here. Here it is up here. Oh my goodness. A lot of data on this stuff, guys. 1977. And it just doesn't happen. Okay. It just doesn't happen on the older stuff. The newer stuff floods much more frequently than the older stuff because they're trying to recapture land. They're building in areas they shouldn't have. They weren't dumb building houses 50 years ago, 100 years ago. They knew where the stuff would flood. They knew what the thing would be. So anyway, that's that. So let me go in and let me go to let's go to the Z value, the not the Z value, but the median. Let's see, ZHVI. So let me get the zip code here. 75150. Oh, I love this zip code. So let me go to ZHVI and then we'll open it up to questions. ZHVI 7150. Nope, 71750. I think. Let me double check it. 75150. 75150. Let's see what the ZHVI is. 259. Okay. Well, check this out. 25 days. That's what we were talking about earlier. I've not seen anything under 30 days since I've been utilizing this tool, which has been a while. That's super fast. Okay. Median home is 259. So we're above it by 15%. But that I don't care about that because when you look at this map, you got a really big area right here, right? You get on one side of the freeway, it's more valuable than the other side of the freeway. But we already saw the other map. So this is definitely a deal for me. So let me go back to the deal evaluator. So if somebody's interested in this, you can get into this for probably right around $55,000. Probably you can get a buyer in this house probably in less than, look, it could take 4 months, but I would say just from my experience, coming in the time of the year, coming out of the election we just had, coming what we're doing, I don't think this thing lasts on the open market for owner finance buyer this price point for more than 30 days. That's my opinion. So does it mean it can't go longer? Sure. But you have plenty of profitability in this deal when you go to the analysis here. You got plenty. I mean, it's a $200,000 property. So even if you miss it by 10%, 20%, 30%, it's still a smoking deal. And you just need to make sure if you want to do this deal, you need to be able to get 55 to $60,000 somewhere in that 15% range. So if you got a HELOC or line of credit or cash in an IRA or friends and family, this is the deal I would do. That's me personally. So, all right, let me see what we got here. Let me check the chat real quick. Any questions? I got to see Ryan's got his hand raised. Ryan, do you have a question relative to this deal?
No, I was gonna see about another thing to look over with you if you had
Yeah, I
time.
think you were late joining. So Mike, we're gonna do Mike's deals next, and then
Oh,
we can show yours. Okay. You weren't on when we first started. So
yeah, you're right.
so guys, any questions on this deal? If you're interested in a deal, just put it in the private chat to send it to get it to myself or Elvia. This thing won't last long. I mean, this thing will be gone probably. If I go in and I record this example, we'll probably have this thing. The thing will be out the door probably within 3 or 4 days tops. It's just too good of a deal. So, if you have any questions on it or you're interested in it, just let us know, and we'll get you the details. So, if that is, if there's no questions on it, does anybody have any questions on, on how we structure that deal, why it's a deal versus not a deal, why owner financing on a wrap is better than rental? Because you can't make that work as a rental. Okay, doesn't work. This is why these deals in Texas are smoking good deals for people that understand how to do wrap mortgages to owner occupants versus trying to take them down and do it, because it costs 50. Let's just say you're in it for $50,000. Okay, let's just say that's the number. Okay, they're not free, so you got to come out of pocket on it. So now, I don't care if you get depreciation or not. Okay, depreciation is only of value if you have something depreciated against. Means you got to be making money, right? If you're not making money, the depreciation doesn't get. You're not offsetting anything. So if I go back in, and let's just say for sake of argument, that it cash flows, that you can make $500 a month, which would be an astonishing amount of money on a rental, right? Let's just say that you could make that your cost, let's just say you use your own money. Okay, not even use private money, use your own cash on a deal, and you don't borrow, because if you borrow, it gets even worse. Let's just say you had $50,000 burning a hole in your pocket, and you go, you know what? I want to put my $50,000 in it, but I'm going to keep it as a rental. Okay. Well, I'm also going to assume that you're not having to do any work, which obviously is not going to be, to get it rental ready. It's always going to cost something. So you put $50,000 into the deal. Okay. And now you're making $500 a month cash flow. Okay. Okay. But you put 50,000 in. That means you got to run a perfect race for 100 months at $500. If you put 50,000, is that right? 100 months, right? 500 goes into 50,000, 100, right? So you got to have perfect attendance, perfect tenant participation, assuming you're self-managing this, assuming there's no repairs, no deferred maintenance, none of that. 100 months. That's a long time. And then, then that's just to get all your capital back. Then you can get $500 a month. Well, hell, I'm just showing you how right now with leverage you're going to make. What was that? 14. Let me see what it was. It was 192 now, and then it goes to 1,400. I could give two rips about the depreciation. I'm getting amortization and pay down. This is why banks are in the banking and the lending business and not in the rental property business, guys. Period. Because I can promise you, if the bank could make more money by being a property manager, they would. They would. They'd rent everything. But they are sort of doing that in a way because they're still getting cash flow by lending money and getting the amortization and still getting the property as collateral in the event of a default. That's what we are. We're a version of a bank. But it's not for everybody. And if you don't have the money or you can't acquire it, do not do this model. I'm just telling you right now. Find somebody that can do it. Just put a fee on it, move on to the next deal until you understand it. So anyway, any questions on that? And if not, we're going to go to we will go to Michael. Let me just see here, nothing in the chat. So let me go back and share my screen, and then Michael, I'm going to bring you on and let's walk through this deal. Let me go find
Sounds
it real
good.
quick. Let's see here. Valuation. So this deal is actually Michael's, and he is looking to potentially sell or finance it back out and do it on terms. So
It's
let me find it.
3928
Yeah.
Aves.
Oh. All right, here it is. So here is the deal. All right. So I'll run through this, and then Michael, you can add any insight. So it looks like, based on the information we have, we got a value of $330,000. Does that sound about right?
Yes,
Okay. Now this is long-term rent at 2,500, but you can actually probably get more than that as a short-term rental, right?
that's correct. It's currently a fully furnished Airbnb.
So right now it's a fully furnished Airbnb, and are you going to sell it that way as well?
Yes, so it's literally turnkey.
All right, super. All right, so let's go to the next screen here. So this is there's underlying debt on it, and you're willing to let somebody take the debt over sub two. Is that correct?
Yes,
Okay. So here is what I show here. You got 119,000 and an unpaid balance to the bank. Okay. We have an agent fee in there, 7,000, closing costs, that cash to seller, 45,000. So the total acquisition is about $57,000, and the total cost base is about 296. So a little bit of equity. The underlying debt on this is at 3.167. It's been paid down a little over 3 years. And there's that. And then you're willing to carry back $120,000 at 5 years on a 30-year term. And what balloon are you looking on at? Is that negotiable?
yeah, negotiable, looking for preferably 12.
About a 12-year balloon. So a 360-month term, 12-year balloon. Okay. Super. And that doesn't apply to the underlying mortgage. You're okay with leaving that in there longer
That's
term?
correct. Yep.
Okay. You just want your seller carry to be balloon at
Yes,
12 years. Great. So let's go look at the summary here. So if we sell this to a retail buyer, we have it at 330, but I put it in at $300,000. Let's just see, we can modify it too. You think if we put it on market, or somebody went to go find a buyer down there, because this is on the coast, but it's never flooded. Is that correct?
that's correct. We've had it for years. It's never flooded for us. The previous owners reported it never flooded for them. The lot is actually not designated as a floodplain. We don't need flood insurance. We just have wind insurance.
So you got an insurance policy that shows it as a non-flood insurance required by your underlying lender. Is that correct?
Yes, yes. Otherwise, I wouldn't have bought it.
Right. So you have a lender that put money into this deal, and they said, yeah, you don't need flood insurance because the lot is not a floodable lot.
That's correct. And it's
Got
about 2 or 3 blocks from the beach.
Gotcha. So that's good. We'll go to the pictures here in a second. So I have it in here. I just modeled it at OneNote just because it was easier to do it that way. And at 9%, that gives us that payment. I don't even know if this works. I'm going to go see it in a second. So let's just see. We can come back and modify it if need be. I think you probably get a little bit more than 300,000. Like, you could sell this to an owner occupant. You could also flip it to an investor, or somebody can just, buy it with creative financing terms and run an Airbnb model off it. So let's see here. So third party financing, let's see what this comes out today. So let's go to 66 months here and see what that gets me to. So at 66 months at 15%, if you use private money, it would come out to be about -80. Let's just go to 72. I'm just trying to see where the break even is. 5 or 6 years is the max I'd want to go on this. That gets us down. That's about the break even point. So let's just leave it there. Let's go to the summary now. About break even while gap funding is being paid back. Then it goes to $1,200 a month. So on 120, we said 12 years. Is that what you said? So if I
Yes.
change this to 144 to analyze it, I mean, it's worth quite a bit there. I mean, let's go back to 10 years. Let's see what that is. It's still $234,000. And the reason being is because the debt is cheap on it. So $57,000, 296 cost base. You got a little bit of equity. You know, could I sell this at, let's see what happens. What if we sold this at 325 at retail? And we took, but we changed the interest rate down, the bank rate. Just seeing what happens. That's gonna make the payment go down. The dollar value went up, cash went up. Now you got a negative cash flow, a pretty substantial negative cash flow there. But let's see what the bottom line is on this. It's still a deal at 125 because you have equity in that deal, which is helping them out a little bit. So let me go back and put it the way that it is and double check it. Got a unpaid principal balance of 115 at 3.167. You got about the same amount seller carry at 5. So the blended on that's about 4%. So 4% is the blended rate on that. And I'm going to go back to this number up here. I'm going to change this back to what it was, 9 point. I think we had a 9.0. Let's see. Yeah. There. Go back and solve it. Let's measure there. Yeah, that's it. Just want to get it back to where it was. 110, 120 years, 120 months, 10 years. About $171,000 payoff, needing $57,000 against the 300,000. So if you got the cash and you like this deal, you know, what do you think do you run any air DNA numbers on it and say, what is the potential rental, short-term rental on that? And how many days a year, what could it rent for? Do you have that? You know that, Michael, off the top of your head?
To be honest with you, I have to defer. My wife actually manages that property for
Right.
me.
I'm just curious. It's another strategy or another exit on it, but yeah. So I'd give it a B deal. I mean, if you want to make it a little bit better deal, then I think you can just end up negotiating with Michael on this piece of it right here, on the cash side of it, as well as the seller carry amount. So if you like this deal, let's go look at some of the properties here. I didn't do that. Are the properties online, Michael? If I go to this
Yes,
address
yes,
here,
it is.
let me see
Pictures,
something here.
everything.
Let's go look at this here real quick. So here's where it's located. Here's the Gulf of America, right? This is the Gulf of America right here.
Yes.
I want to make sure. I don't know if Google's updated the maps yet. Let's see if they have. Just curious. No, Google needs to get their act together. They still show it as Gulf of Mexico. That'll be fixed in a couple weeks. Sorry if I misled somebody there. All right, let's go back to here. So it's on the island. It's on Galveston Island right here.
Yeah, and guys, I
I'm
will
just gonna
say that
keep-
the city they spent like 9 months. They tore up the street. They put in beautiful sidewalks, and they're really trying. In fact, you can see all that looks like it's all new concrete. They're really trying to make it a nice wide boulevard for walking and biking and everything.
Yeah, it's nice little place for that price point, that close to the water. I mean, I don't know if you can beat that. So let's go back and let's see if we can see some pictures here. Let's go here.
I think those are old.
Are these the old ones? So this
Yeah,
one it
those are
was.
old.
Do you
Here,
have,
you know what?
do you have a
I
link for
got
the new
a
ones?
little flyer here. Let me share if it's okay with you real quick. I got a couple of
Yeah,
pictures.
go ahead. Yeah, you want to give your screen share on your
Yeah,
computer?
please.
Yeah. Okay.
Let's see here. Let me move this over. And you can see, guys, what we've got here in terms
Hang on.
of,
I'm gotta stop sharing here. Go ahead.
you can,
Okay. Hang on. Are you sharing, Michael? Let me see. There you
yeah,
are.
it should
Okay,
be.
I got it.
Okay.
Okay.
And guys, you can see, I've got more pictures if you want it, but you can see it's been completely redone. We spent a lot of money on it. It's beautiful. The upstairs is completely finished off as a bedroom. The only thing it needs is just a staircase built to it because it had a circular staircase, but you've got several more bed space up there. And it's really completely 100%. Everything you see comes with it. I'm not taking anything out of it.
It's nice. I mean, it's
Yeah, I mean,
nice.
we
So,
redid the driveway. We've got the brick patio. We put a bench there. It's got security cameras. It's just really a nice little property.
and how far is it to the boardwalk? Like 5 minute walk?
Yeah,
I
if
mean,
that, it's like 2 or 3
that
blocks.
nice. Yeah. So if you guys are interested, reach out to Michael. Obviously you can get him inside the school community and then also, uh, from, there. And Michael's in the community, quite a bit.
Yeah, and
He
guys, if
does,
it doesn't work for you, that's cool. Then at that point, I'm just gonna sell it direct at 9%, 9.5%.
yeah. So, yeah. So, guys, I don't know if anybody. Let me just share my screen real quick, Michael, and then I'm going to get to Ryan here in a second. So let me go here. I'm going to just show you guys one thing real quick. So, if you go to here, guys, we keep adding more stuff into the classroom, and as you guys, if you're in the membership, this is where it will be. So we just added this AI Credit Max. Awesome, dude. If you guys need to go do the eligibility test and the quiz and see what you guys have an opportunity for. We just brought in David Olds. We're getting this finalized here probably in the next week, which does all of nationwide transaction coordination and closings. And we're integrating the note stuff on top of what he does. He's probably the largest in the space. Obviously got Alan on here with Rap University. We got note servicing. This is all stuff that's getting added: legal asset protection, AI solutions, insurance, capital raising, all this stuff, guys. So it's all right here and in the calendar. It continues to get added. We have this stuff coming up. Just look at it and see. We're going to add new people in here. I got 2 or 3 more to get are going to be added to the calendar from an educational standpoint. So you're pretty quick. So, guys, just go into the school, go to the link. You can go, if you haven't done it already. I think it's just, you can just go to if you're not already in, then just go to school@creativedealmaker.com and just watch the videos and go through it, and so forth. So let's see what else. Okay. So let me go to Ryan. So let's go to Ryan. Any other questions before I jump into Ryan? Anybody got any questions,
Guys,
comments?
I will also say I've got one in Rockwall. I'm going to be seller financing. So message me if you have any interest in getting a dibs on that before I go public.
Yeah, I might want to send it over.
Okay. Thanks. Appreciate it, Nick.
All right. Sounds good. All right.
Enjoy your
Let's go
mall.
to, it's not a mall. It's a business. And I wish it was the mall. Anyway, it'd be
He's just
funny if it
waiting.
was the
He's
mall.
waiting your food.
What's that?
Just waiting your food from Jimmy Tang, which has the name of that one.
Jimmy Choo? The shoe
Yeah.
store? You want me to pick you up a pair while I'm out here? I know what Jimmy Choo is. I got a wife and daughter, man. I know that stuff. All right, let's get to Ryan. Ryan, what do you got, man?
Yeah, I don't know if you saw my text, but I was wondering if we might be able to review one of these deals, one of my rental properties that I'm looking to offload.
Okay. You got it in the model. You want to share it?
Yeah, it's in the model. I can share my screen real quick. Let's see. You see my screen?
Yep. Mm-hmm.
Okay. So yeah, I got an investor that's saying he wants to buy this sight unseen. He's willing to, follow what I'm looking for as far as leaving my loan in place. The thing that's unattractive is he's not really offering a down payment because he's saying like he needs to avoid that to make it make sense from a cash perspective, but he is willing to pay all closing costs. And so I just want to kind of get your feedback on like how to properly model this if I were to actually take him up on this. My concern with this property is the maintenance that might come up if I don't get rid of it. It's probably going to need.
I mean, it's just a financial decision, and what's right for me might not be right for you, and so on. Just go. You got to make a decision. Look, you can protect everything legally, on the way that you write the agreements. I mean, it's an investment property. The ability to waive the right for foreclosure or arbitration. You can put all that into the terms. Like, all it really depends on how much equity position that you have in the property versus what you owe versus what you're going to sell it for. I don't know. So that's the bottom line. So if it doesn't have to go to foreclosure, is your initial investment protected? I don't know. Just show it to us. Let's see what you got.
Let me I'll just put this over here so I can reference it, but let's see, let me pull this back up. So my my underlying remaining balance is only 60,000. It would
Okay.
sell for 134.
Okay.
And then
Do you
yeah,
have
I
any
mean,
cash into this deal besides the balance? Like, you've been getting rent on this property, right?
yeah, but I mean it's
Are
been
you
okay.
net positive or net negative over the time that you've owned it relative to the balance of $60,000?
Positive.
Okay, so there's no reason to put anything in it because you're positive. Okay, great. So that's fine. So you got this down here. Are you direct to the seller? I mean, direct to the buyer? Does he have any representation, or is that all you?
So he does not. I have it currently listed with an agent. I got to talk to that guy about, I guess, I mean, if this guy's willing to pay all the closing costs, maybe he'll just cover that agent's commission if I can't get him to back out with his agreement.
Well, what is the agent commission?
$2,000.
All right, so I would probably put that in there
Well,
somewhere.
I mean, I could just put it here in
Well, I
case.
don't care where you put it. It's a cost. Is my point. Somebody's going to pay it.
Yeah.
It doesn't matter who's paying it. It's got to get paid, right? Either you're writing a check or he's writing a check.
Right.
Because you're going to see when you get to the bottom of the screen, it's going to be negative.
Yeah. Okay. Well, and so in selling it, I gotta change this. That was for another investor that was talking to me about doing
Okay.
10% down.
So right now, your total acquisition is not $2,000 though. It's you got to put the closing costs back in there.
Oh,
It
well,
still goes in there. You got to show it some other way. It needs to be in there.
okay. So just make it 65.
Whatever, and I would show that as probably as the down payment from the buyer, and then use that to pay, then use that to do it. That's what I would probably do. So if it's 6,500, then the buyer is basically being $6,500 down.
Okay. So
That's what I would do. I mean,
move that to right here.
yeah, whatever that number is, because otherwise you're going to be coming out of pocket.
Okay.
All right.
Um,
Whatever he doesn't bring, you're going to have to pay.
yeah. Well, and that's what I'm trying to avoid. Like if I were to take this deal, I'm doing it to maintain the monthly cash flow on the low interest
I don't
rate
know.
that
I haven't seen anything yet, so let's just see what you come up with. I don't know. You haven't
For
got there yet.
simplicity, I'm going to change this to 1 for right now.
All right, then make sure you override the loan amount.
Oh yeah. So make that 127.5.
Mm-hmm. And resolve the payment.
So, but the thing here is, he's saying that he would make the payment to me at $765 a month for just
P&I.
well, see, this is where this guy's offer is really crappy because he's actually asking me
Stop
to
worrying about his offer. Stop worrying about his offer. You need to solve it for what works for you. That's it.
Well,
Just
yeah.
solve it for what works.
Okay.
You
Well,
can't, you're not gonna, you can't, if you don't solve it for that, you're gonna be. Why would you do it any other way? You're not gonna sell it to lose money, like on a cash flow basis.
right. So, I mean,
Why can't you make the loan amount $140,000? What's stopping you from doing that?
I potentially could.
Well, that's what you do. That's my point.
Right.
So that's like I wouldn't do the rate at 6%.
You would not.
Change it to 8. No. Look, that's below bank rate, and he's not even put any money down.
Yeah.
Change it to 8.5 or 9, and then resolve for your loan amount. No. Loan amount. Go back and put the payment in that he wants.
Oh, right here.
Yeah, whatever that was. put the payment in that you think that he wants, and then solve for the loan amount. I don't know what you did there. You're gonna have to. It's gonna be because you got zero in the amount financed. Just change it to 145 and then see what happens.
On the
Go to
amount-
the top. Go to what you got to put the sale price at 145. Now go down. Okay, now solve for the no, solve for the interest rate. No, but you don't have the right loan amount in there. You still got to override the loan amount. You got the wrong down payment in there too. 0. Change the first lien wrap to 145. Oh, actually, you got to put the down. I'm sorry. What was the down payment again? 6,500.
65 estimated.
All right, put 6,500, and then now you put 138,500 in the next line. Okay, now solve for interest rate. That's the interest rate. Why would you? I would never do that.
No, I get it. I'm just trying to figure. I was trying to make sure I used this tool correctly so that I knew what it looked like with what he's suggesting right here.
What's your underlying mortgage payment?
PITI is let me pull it
Because you
up.
got to collect taxes and insurance. You cannot let him escrow taxes and insurance. I mean, you cannot let him pay that separately. Would never do that.
My PITI.
That's a deal. That's a deal killer for me. Okay, period.
You say
So
that
I would
again?
go.
You would
I would
make
not
him-
let. Hell yeah, I would make him that the payment includes taxes and insurance
Yeah, and that's what I was
that
telling
he's
him.
paying.
That's what I was
I
telling
would
him.
never let him take control of taxes and insurance. Never.
Because my underlying PITI is 455, and my
Does he
PI
own any other? Does he own any other properties outright where we can cross collateralize them? Does he own anything else?
I think so.
All right, if he owns something else that doesn't have debt on it, and he owns it free and clear, then I would consider using that instead of the down payment.
To
If
cross.
he's got a $500,000 asset that he isn't owning money on, I would secure that with this right here, 100%. So anyway, how much is your PITI on this? Let's just go from there. Let's just go back to that number.
Yeah, my PITI is 455 basically.
Your PITI is 455, and for this to get off the books and leave it all right here, how much do you want a month?
Above and beyond my beyond my P and I, it would be nice to clear like, 400 or 500.
All right, so add 400 or 500 to your PITI. That's the payment number. Can he make money? Can he make money paying you $900 a month?
Probably
With no
not.
money down.
Probably not. Maybe a little bit. Depends. Near term, probably little to nothing. Long term, yeah, probably.
You just got to figure out where you want to be on the deal.
So you said to add my PITI to where?
Honestly, what I would do on this deal, dude, I would sell this goddamn property for cash, take your money that you get back and go buy something or invest in something that's a better asset than this. That's what I would do.
100%. I just don't know if the cash offers I'll get will be. I'm waiting to get one today. I'm supposed to get a cash offer today, but
What's the market value on this house?
I've been seeing different numbers. It's about between 115 and 125.
Okay. Well, I don't think you're gonna have a problem getting 80 for it. I'm not saying you want to sell it for 80, but I mean it's more than what you owe, and get it done and pay it off. I mean, that's it. Or you go find a seller finance buyer and do the same
Yeah,
thing.
and that's what I've been trying to do is find a homestead buyer for it to wrap it to, but it's been hard.
Well, I don't know what you're trying to sell it for and what it is, but yeah, whatever. That's it. I mean, I'm just telling you what it was my deal. Look, you don't live in Memphis. You live in Idaho or wherever you're at. I mean,
Yeah.
first of all, I don't even like Memphis. I mean, I would not own assets in Memphis. I'd own a note in Memphis. That's different, but that's
Yeah.
different than a property, right? So for me personally, I would rather I can do a hell of a lot more damage even if I got even if I broke even on it, I'm not saying that's what you should do, but even if I just took hell, even if I lost $10,000, even if somebody said, "Hey, I'll give you $50,000 for this right now," and I had to write a check for that, I free up that thing and I can move on. So you're not gonna have to do that, but you don't have, this is not your money in it. You have bank money. So just get the bank debt out of them and get it off the books. I mean, that's me. But but what I want to do and what's important to me, because it's just eating this is just eating my time up. It's eating up it's got a lot of risk in it. I got a tenant in it, which I hate. I got tenants I'm dealing with. I got probably an old property that's got deferred maintenance on it. I'm gonna come up, I'll talk to that on. It's just the return isn't worth it's just not worth the return. If I had 50 of them or 100 of them, that'd be different. But one property in Memphis, I don't know, 50, 60, $70,000 value, not even. You're better to take and you really realize your other time elsewhere.
Yeah,
Or
no, I agree. That's why I'm trying to
or
find
go
a way to
seller
get rid of it.
or go find a seller finance buyer for $80,000 at 10%. Do that too. I think you're trying to sell this for way more than what it's probably worth, and you're trying to hit a home run with something that you'd be happy to just getting a walk on or a single on. That's my
Yeah.
opinion. Okay. This
So-
is not a desirable area in a desirable. What's the ZHVI for 38115?
Let's look.
So it's high. So that's good. And what's the tax value on this?
I gotta look. I'm not sure.
Do you have this on the market right now?
Yeah,
Go pull it up on Zillow. Let's see something. Go pull this property up on Zillow.
might be better on Realtor.
Well, if it's on the MLS, it's on here. No, go to Zillow. Let's see it on Zillow. We'll come back to that one in a second. I hate using Zillow this way. Just for the record, I always go to Google, type the address in, and then click on the Zillow link. This never works out this way. I don't know why. They always trying to take it. So you got it listed at 134. Scroll down for me. Keep going down. You went too far. Go back up. I want to see the days on market and the views. 114 days, 149 views. Okay. That's like not good.
Yeah,
Not good, right? Not good. And that's it. So let's go look at it. So that means you're only getting you're getting a view a day. One view a day.
right.
That's not going to sell much stuff, right? You need to be seeing 50, 60, 100 views a day. That now you got a desirable property. Doesn't mean you can't sell it. It's just like if this was listed at $99,500, I bet you would get a buyer.
And that's probably a better idea. The more I think about it.
I mean, you can go get it. Look, so here's how I do it. This is exactly how I would do it. What's the rent? What's the rent value in this area?
I
What are you
was
getting
getting
rent
11.
right now?
I was getting 1150, but to get it re-rented, I had to drop it to 1050.
All right. So okay, great. So this is what I would do. Do you have the note unlimited? Here, I'll just do it myself. It's easier. This is exactly what I would do on these types of properties right here. Give me
You
one
want me to
second.
stop my share?
Yeah, give me 1 second. I'm going to do this and then we're going to wrap this up. Let's see here. I got to find my too many screens open here. Give me 1 second. I'm going to tell you exactly what this property is worth.
I stopped my share if you want to share your
All
screen.
right, let me share my screen. Okay, here it is. What's tax and insurance on that?
Let me see here. My annual
It's probably on the Zillow. You probably can run the report on it, but just tell me what the taxes. I mean,
Well, I got it
the
right
insurance
here.
can't be more than $100 a month.
my annual insurance is $740 and my 23 taxes was $977.
That's it. So you're talking less than so
Like 141, I think.
So divide that, add those two up and divide it by 12.
I think it's
How much is
140. 1 second.
Okay, let's just call it a little bit more. Okay, great. So this is what we're gonna do. Can you see my screen, by the way?
Yeah.
All right, perfect. So if let's just say that you can say you want to put somebody in this house for $1,000 a month, all in, okay? Let's just say that's the magic number, 1,000, okay? If I take 150 from 1,000, that means the P&I needs to be $850 a month. All right? You follow me on the math?
Yeah.
If somebody's going to pay $1,000 a month to own that house instead of rent it, and they have $150 a month going to insurance and taxes, that leaves $850 a month to be going to P&I. You follow me?
Yeah.
All right, great. I'm going to put $850 in here. Okay. I'm going to leave the term at 360. I'm going to put 9% rate. Oh, I got to log in. Hang on 1 second. Okay. So I'm going to do 850, 360. I'm going to solve for this. So for 105, if you sell this house for $115,000 and get $10,000 down, or you could sell it for $105,000 and get zero down. It's your deal. You can do whatever you want. There's nothing that says you got to take a down payment. No, nothing at all. Would I do it? Yes. I would at least get a couple $1,000s. Let's just say you sell this for 110. You got to pay an insurance. You got to pay the money out for the whatever. You sell it for 110 and get $5,000 down. Okay. This makes you $850 a month. And how much is your underlying debt? 450?
PITI, yeah.
No, what's your P&I? What's your P&I?
Oh, my P&I is 287.39.
Okay, so that means you're making $500 a month cash flow by selling this house when financing $105,000 at 9% to give the buyer that you're selling it to the same payment as they would have rent the house.
Right.
Just solved it. I mean, there's the answer to your question right there. That is it. Period. That will net you $500 a month. So why am I selling it for? Why would you sell it for $135,000? You don't need to.
Right.
I mean, you can. I'm not saying you shouldn't. I'm just saying you don't need to make $500 a month.
Yeah, that's why I'm revisiting this and getting your feedback, because the initial strategy on that price was to try to focus on just people as potential buyers that would want or need seller financing.
I personally would not sell to an investor.
No, I know that's been a bad idea on pretty much. It's always a bad idea in most cases.
I mean, you can. I mean, homeowner is going to live in a house. They can live with the fact that a homeowner can live with a leaky faucet. A renter is going to call and beat you up all day and say, "Come fix my leaky faucet. My toilet doesn't work. My air is not blowing cold." You don't a homeowner never calls the bank when there's a problem with any of that stuff. So
Right.
that's what I would do. I would solve it for the best deal that you can get. I mean, look, let's just say, could you solve it for less? Could you even give them a better deal than rent? Yes, you could. Right? Could you do this for could you do this at $750 a month? Okay, let's do it at $750. Okay. Now you're talking $93,000. But if you want to raise the interest rate to, you want to go to 9.9%, guess what? The payment's going to go down again. The balance is going to go down even more. Now you're at 86. So how much, if you want if you want a higher interest rate, then if you want a lower interest rate, then this is going to go up higher. There's your balance. People are going to be buying this house on what you're selling or for price. You're going to sell this on payment. Why, when you can own this house for $950 a month? Easy qualify. Boom. That's it. They're buying it on payments. They don't care that it says $112,000. Right? Doesn't matter. You're not selling the note anyway. You're going to keep it in arbitrage. So personally, I would probably still write this rate at about 9%. And I'd write this for sale price, maybe I put it at 110 and then I solve the interest rate. I mean, it doesn't matter. It's just the payment never changes. So you can give somebody bank rate and a discount to buy it as is and qualify them and turn it into an owner, a homeowner, property instead of a rental like that, and never have to screw with that, except making sure they get what they pay. That's it. That's what I would do. I would do that all day long on a deal like this. Wouldn't, and you can find a buyer at that price point, at that payment, because of the fact of the way it's structured.
Yeah. With
That's
the
it.
loan in my name already on the underline, would you still work with a company like Provident as a loan servicer once something like this were to go through?
Yeah, they're not going to probably service Tennessee. I don't know. We can find somebody that does though.
Yeah, I'm just being someone like them.
Yeah, 100%. Yeah.
Yeah. Yeah. Okay.
I would still put it into I would probably move it into a trust, then assign the interest of the trust to the new buyer, so you don't have to change title again.
Yeah.
And then that's do it. I mean, I don't do anything in Tennessee personally. We could probably, once you get to that buyer, we can probably get David Olds involved because he's actually out of Knoxville. He'll be able to do all this for you. His a TC company.
I think
As a
I remember
closing
you
company.
telling me about that guy. What's his last name?
David Olds. He's around all over the place. He's a friend. Just get
David.
to that point first. Don't worry about any of that. Go find a buyer first and get a contract. How about that?
Yeah, yeah. No, I agree. Okay.
This is it. This is what I would solve. I think if you can keep that, why rent when you can own for less than $1,000 a month? There's somebody who will buy that all day long for that price, live in that house all day long at that price point, and do the repairs and make it, because every repair they do only benefits you as the lender, because they're making
Right.
the house better. It might be
Yeah.
$160,000 house in 2 years because of the repairs that they've done. Now what is it worth? Now what if they wanted to sell it? They just did all the work for you, and if they sell it, then they get the money and you get paid off. Anyway, all right,
Thanks.
all right, that's good. All right, let's see. Any other questions or anything? And we're gonna wrap this up. Let's see here. I don't know that we have any questions. Check your calendar in school, because as we get new guests on, sometimes we move stuff around and we change it. So I don't know what it is yet, but guys, there's a lot of deals out there, a lot of opportunity out there. Let me know if there's anything you guys need. And Michael, are you still on? When's your next call? Monday? I don't know if we lost Michael or not. He may have hung up. Let me just see. I think he's up next on the calendar. Let's see here. I think the next call is calendar. Yeah, Michael is at noon on Monday. And then I'm not sure about deal or no deal next week. It's on Tuesday, but we did Friday. If I have a deal, we'll do it. If I don't have a deal, we'll wait and do it later in the week. So that's all I've got. You guys have anything else? Let us know, and have a good weekend. And go get some deals. We'll see you then. Take